Hello traders and welcome to another video review. Today is Wednesday, November 2nd, 2022. Let's find out what's going on the Forex calendar. There was some data released overnight, however none of this matters actually because the key event of today is a Fed interest rate decision, FOMC statement and FOMC press conference. All of these events are scheduled at 8 o'clock and 8:30 respectively. So please don't be surprised if you don't see too much of the movement during the German Unemployment Change, manufacturing PMI, which are important data as you can see here and are scheduled for release 5 to 10 and 5 to 11. Or for example ADP Non-Farm Employment Change and Crude Oil Inventories. Those might be non-events, or we might see some sort of the accumulation of a volatility during the interest rate decision and press conference in the US. This is the event that all of the financial market enthusiasts have been waiting for, the traders are waiting for, the investors have been waiting for. So please stay vigilant, stay focused during this time of the day, because you might see some sort of the unnatural behavior, especially if Fed will disappoint. Interest rate decision 3.25, forecast is 4%, so the market participants expect another rate hike by Fed. So let's see how the US dollar generally behave just before the interest rate decision. Let's start with the euro dollar. Why we start with the euro dollar? Because there is some kind of invalidated scenario here. As you can see, I got my alternate scenario, the 1, 2, 3, 4, 5 to the upside, and because the wave 1 and 4 overlaps over the level of 9,882, this scenario is now invalidated. So we are sure that this up move here was in three waves, ABC towards 100% of the Fibonacci extension. So very nice market geometry level, ended up with a pin bar, and since then we are done, and the market is going lower. For now we are apparently traveled already over 237 pips, minus 2.37% was done already. So currently the level of 9,945 will act as a technical resistance for the price. So this is a resistance. Well, I need the red color, thank you. And the other level 9,901 will act as a resistance. So this is the resistance as well. So volatility, as you can see, is minimal, and market is apparently positioning itself for a breakout lower, because if the Fed delivers, the dollar will be much more expensive again. So what will investors do according to that logic is to sell the euro, buy the dollar at the same time, which is why the momentum is below the level of 50, already tested the neutral line of 50 here, and then bang on one candle erases half day of the gains. So please notice the fact that the probability for a move to the downside is very, very high, and it looks like market participants are targeting the level of 9,811 and 9,757.37. So this is the target for today after the interest rate decision by Fed is made. Of course, please wait for the press conference of the Fed, because some of the remarks might give a clue to the market participants of what the Fed wants to do later on, and that means an additional volatility might be seen on the euro dollar. So that's the euro dollar. Let's find out what is going on the US dollar index here, and what is going on here. We have a decline. We have a decline just as expected. This is one big arrow down, as you can see. Very nice pattern to the downside unfold. We almost hit our target of 100%. I'm not quite sure how big is the miss there, and I think it's gonna be just a few pips. Let me just switch back to the 4-hour. Apparently the miss is around 59. Low is 109.59. The 100% 114, about 35 pips. So this was the target. This was the place we were waiting for the wave C to arrive, and I guess that's the top for the wave. That's the wave for the top for the wave B. So that's the wave B top, and ABC to the downside is now done. So let me just adjust this measure for the ABC is no longer necessary. The measurement for the decline, accurate measurement for the decline, is minus 4.60. And since then, what do we have here? Of course, the market is like it's a consolidating right now in a narrow range, just under the technical resistance. So please notice the fact that if Fed delivers, we might see a breakout to the upside, and then euro dollar will go down, and then some other asset will move. Let me just focus now on the US dollar index. The target is 113.89, and then even the swing high at 114.75. Nothing wrong with this. Scenario right now, ABC to the downside during the uptrend. So please be aware of the fact that we are still in the uptrend. The recent decline for minus 4.59 was a little bit bigger than the last big correction, so it might be treated as an overbalance. However, because of the interest rate decision, this might be treated as equal to the previous one. Okay, and if we see a spike higher, of course, that's just the confirmation that this ABC down move is just a downtrend. It's just a pullback, basically. Sorry, it's just a pullback. It's a correction during the uptrend, of course. So that's the US dollar index. Another market that might move today is, of course, the SP 500. So what do we have on the SP 500? Daily time frame chart is showing us that we tested the 50% of the Fibonacci retracement yes, as expected. 3,503 was hit, pin bar made at the very low of this move to the downside, and then of course we have a bounce into the wall of the technical resistance. So let me just switch to the 4-hour chart, and for you to see that apparently we got the pin bar of bullish engulfing, and we're going up and up and up. Right now we don't need this lines anymore. What we will do, we will add a trend line from the bottom, or maybe even channel. Let's try with the parallel channel from here to here. As you can see, the market is apparently moving inside the channel, just above the 30 periods of the moving average, inside of the positive zone of the momentum. So the bulls are now in charge in the short term on the S&P 500. However, it might change very quickly after the interest rate decision. Please notice the fact that below 50% there is a very wide zone of the demand, so that might be hard to break through the zone in during one attempt. On the upside, we got, of course, the local supply zone. This supply zone is located between the levels of 4,114, 4,180. So if we spike here, some kind of activity should be expected up to this level. So S&P 500 slowly going up, positioning itself for another rally to the upside. And the last market that might be, of course, under the influence of the interest rate decision is the gold. So let's switch to the daily time frame chart for gold, and as you can see, the gold is still under the under the trend line, so the trend is down. However, the last swings here didn't make a new low, and the market is consolidating under the 30-day moving average, under the technical resistance and trend line. So any breakout above 1686 will be a clear signal that something has changed on the gold market, and the bulls are trying to gain more ground. As you can see, we have multiple positive divergences here, so please stay focused, stay vigilant on the spot gold market, because we might be expecting a breakout to the upside soon. However, as long as the breakout is not confirmed, the Dow trend is still intact. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.